from your perspective, because I also think there's some listeners out there who might say, wow, that passive income sounds good. Limited partnership sounds good. From your perspective, how has it been? And then maybe what are some things that stand out for you to invest with somebody, if that makes sense?
Yeah. So first, I would tell people that if they're looking to invest in real estate and they're willing to do the legwork themselves and they enjoy that, or there's parts of it that they enjoy, they're going to make more return on their money doing their own active real estate. That's my opinion. If I focused on my own portfolio and what I was doing, I'd make more money on my money. But it really becomes at some point a return on your money and time. And that's why I'm shifting to a fair amount of time on limited partner investing. I'm investing a lot of time right now to study these operators, to study these markets, to study these deals, and really dig in and assess them pretty thoroughly. But my understanding and networking in this space will pay me for the next 30 or 40 years, or however long I'm fortunate enough to live, because I'm just becoming better at this game, if you will. So I really enjoyed it. Specifically, you asked on limited partnerships, what do you look for? Sponsor or the operator first. Second, the market. Third, the deal and the debt, which is particularly important right now. The sponsor, someone that you know, like, and trust, or a strong referral to that person is really important. And do they have a track record? There's a lot of valuation that can go into just a sponsor. A lot of people want to jump to the deal because that's the easiest thing to maybe look at or understand. But the sponsor, the market is maybe a little bit more straightforward, quite frankly. Population growth, job growth, and landlord friendly politics is what we look for. And then the deal itself, you're looking at it closely. Does it make sense? Are there kind of some assumptions that are too aggressive or not? And then, of course, the debt is really important, particularly now. We like long-term fixed debt products right now. Just, it's not as sexy maybe as some of the returns that people might have been showing a year or two ago, but it's just more safe and secure. And you have a lot of options and exit options with safe debt.
Yeah, we were actually just talking about this in the pre-show. I couldn't agree with you more. I mean, first of all, I love how you started with a sponsor, because that's number one. I mean, again, ask them for references if you have no other way, right? Like if there's no other way for you to ask someone else who's invested with them to say, hey, can I talk to a handful of your investors? Yep. And if they don't supply that, there's a red flag. Because, like I've had that before. People, as a new investor with us, say, hey, can I speak with some of your investors? Of course, I get their permission first. So I'll call that person and say, hey, I have a new investor. Do you mind, spending 5 minutes telling them what our style is like, how it's been for you? Most investors are like, no, sure, of course, happy to chat, right? Yep. So that's such a good tip. Is number one the sponsor, because any deal we've said this before, a great deal can be terrible with a bad sponsor, and a mediocre deal can be great with a really good sponsor. So yep. Love how you start there. It's funny that you go to market next before the deal, because I agree. I mean, again, it's like you could have the best apartment building on the planet, town that's losing 100,000 people a year. It's probably a little bit dicey there. Yep. And then the deal itself. And the deal is hard to evaluate unless you have really good underwriting skills. But you could ask the questions, what are you projecting cap rate over the next couple of years? What are you projecting? And then, of course, debt. Yeah, I mean, this is what we were just chatting about in the pre-show is there bridge loan? Is there something short-term debt on it? Because right now that's extremely dangerous. So I just absolutely love everything you said.
And I think the short-term debt or bridge debt that a lot of people have done, or maybe are even still doing right now, that'll just create some opportunities. I don't want my portfolio to be the ones that are opportunities where people need to exit earlier than they had planned in their business plan. So yeah, and you could argue maybe market and deal and one or the other, but without a doubt, the sponsor can fix a bad market and a bad deal maybe, but a bad operator is probably going to mess up a good market and a good deal. So that's number one. And there's a lot of other how much skin in the game. I heard a question someone asked last Friday, of your employee base, how much are they, if they're accredited, of course, how much are they investing in a deal? Just some really good questions. And I think it's like an interview for an employee. Just kind of dig in and ask for details, and you can learn a lot and take your time in that process.